6 common questions when it comes to dealing with tenant buyers on creative finance deals. What's going on, everybody? It's Jamel Gibbs, your family-oriented entrepreneur. Welcome to another video. So in this video, we're going to have another rapid fire Q&A. Now, I've done rapid fire Q&As in the past, and I'm going to continue to do them. So if you have questions, be sure to leave your comments in the comment section below. The first group of questions came from the Klein Corner 3698. Shout out to the Klein Corner 3698 for asking such great questions that everybody can benefit from. It says, if you're trying to line up a tenant buyer and they ask to see the property because you haven't closed your deal with the seller, how will you secure keys to show the property to the prospective buyer? It's all in the agreement that you've made with the seller. In my agreement with the seller, I let the seller know up front that I need access to the property in order to be able to show potential tenant buyers or tenants that I'm looking to offload the property to. I'm going to let whoever that party is, the seller of the property, know up front, and it's going to be written in my agreement that I need access to that property for a period of time in order to be able to find prospective tenants or tenant buyers for that particular property. And usually when you're talking to the right seller, if they're open to creative finance, then they totally understand the situation. They're not going to give you a hard time with getting access to the property. I always have it in my agreement that I need access to the property before the closing actually takes place. Second question, how long does it generally take you to find a secure tenant buyer? Let me tell you this, everything sells or rents if the price is right. It may take you up to 30 days in some cases in slower markets, but generally, because the way we market our deals, they're generally gone within a week or two. I mean, we have tons of people contacting us on these properties because a lot of people have money, but they may not have credit, or they'll have credit and not a lot of money. Whatever the case may be, when you don't involve bank financing and you market your deals in a way that buyers understand that they don't need to go to a bank in order to be able to buy properties, you're basically picking up all of those extra buyers that the banks turn away and providing them with an opportunity to be able to purchase a property for themselves, even if the property needs work. In fact, most people prefer properties that need work, quite simply because they're going to get a better deal and they'll be able to gain appreciation from these properties. So it doesn't take long to find these properties at all. And if it does take long, you have to change the way you're marketing the deal, because if you can't find somebody who doesn't have to go to the bank, who has some extra capital and bad credit or less than perfect credit that needs repair in order to be able to purchase a property from you, it's either your price is too high or you're not marketing it the right way. If you want more information on how I actually utilize these strategies step by step, I have a course called Hybrid Wholesaling. You can go through it step by step and it'll show you everything that I do on these deals. Your final question, how much of a markup do you sell the property for to secure a profit? Like, do you have a base percentage you stick to for success, or do you tend to vary it? The answer to that question is it really depends. It depends on how I'm feeling. It depends on the condition of the property. It depends on a number of different factors. But generally, if the property needs work, I'm not looking to sell it at top market value. Say, for example, I have a house that is worth $100,000 if it was completely fixed up. I pick it up for $30,000. I'll probably resell it with some equity in it. Let's say, for example, the property needed 20 grand in work. I'm not going to charge $100,000 for that house. I might charge 75 to 80. Okay, so that way somebody can go in, put the $20,000 into the property, and by the time they put that money in, they'll have the value of what the property actually is on the back end. So you want to be fair. You want to create win-win situations no matter what the situation is. So I might make, in that case, $35,000, $40,000, but you have a property owner who's getting the property below market value. They can go in, put the money into the property, and then at the end of the day, they're happy with the deal as well. So the object there is to be fair. Make sure you're not taking advantage of people. Make sure you're creating win-win situations, both for you and the seller that you're doing business with, and you and the buyer that is purchasing the property from you as well. The next group of questions came from that one tech guy, 7512. Again, I appreciate you asking these great questions because a lot of people are going to be able to benefit from it. So shout out to you for asking these questions. It says, what about home inspections? Do you run into issues without them? I honestly don't do home inspections when I'm purchasing real estate. The reason for that is I'm buying the properties as is. By not getting a home inspection, I'm opening myself up to be able to get a deeper discount on the property. If I'm doing a rehab, I may do a home inspection just so I know what's actually wrong with the house, but I'm already factoring everything into the property up front, especially if it needs work, in order to be able to take care of anything that the inspection report would have brought up anyway. Now, as far as selling the property on the other end, most buyers, when they're buying the property as is, they may get a home inspection, but it doesn't necessarily mean that they're going to use that home inspection as a way to negotiate the price down. In fact, I'm not even negotiating my prices down because, as I've mentioned earlier with a previous question, a lot of times I'm selling the properties factoring in the work that needs to be done. So I know with my pricing and the type of buyer that's buying the property, I'm not going to have any issues with an inspection report or selling the property on the other end. A property inspection never really dictates the sale of my properties because I'm selling them as is anyway. Number two, who is liable for issues while the tenant is renting? Say the AC goes out. Since they are technically renting, that wouldn't be their responsibility, right? So on a lease purchase, I'm selling properties as is in the condition that it's in, whether it's in great condition or it needs a tremendous amount of work. The price is going to reflect it either way. So who's responsible? I make sure that the tenant understands, the tenant buyer, quote unquote, understands that they are the ones who will be responsible for rehabbing that property. Again, that is discussed up front. They understand this going in. They understand when they put down that money is non-refundable, and they also have to put the money into the property. I find these buyers all the time. I find these types of properties all the time. People are willing to do these deals just so that they don't have to go out to the bank. Now, if it was a tenant-landlord situation, let's say I'm the landlord and I'm doing a full-blown rental with someone and I'm not utilizing a sale and picking up a tenant buyer, then I'm responsible at that point. In fact, I won't even rent the property to someone in terrible shape. I'm going to put the work into the property, rehab it, make sure it's modern, make sure it's a place that I would want to live in, and then I'm going to rent it for top market value. But if we're talking about people that are looking for home ownership and they understand that the property needs work, those types of people understand that they will be responsible for all repairs, any maintenance, anything. All I'm doing at that point is collecting a check. Again, it's a tenant buyer. It's kind of like me being the bank lending money to a homeowner who's going to live in a property. You can't go to the bank and say, hey, I need my AC repaired. Hey, this property needs to be maintained. That's not the case. You are the bank when you're selling on a lease purchase. The bank doesn't do repairs. The bank doesn't maintain the property. That is the buyer's responsibility. Third, how do you handle a tenant that is in the rent to own contract with you who then decides later on that they want to move and then they ask for their money back that they've put towards their rent to own the property? At the end of the day, the money that they put down is non-refundable. So they put down 10 grand, 15, 20 grand, 5 grand, 3 grand, whatever the case may be. The money is non-refundable. It specifically says it in the agreement. That is giving them the option to be able to purchase the property. If they don't buy the property, or if they put money into the property, for example, for rehab and also a deposit, they lose out on all that money. They have to perform on this particular deal. If they don't perform, they'll lose out on their money. Then you just go ahead and find another tenant buyer who wants to purchase the property from you. And 9 times out of 10, that second tenant buyer will have an improved property, so you can probably sell it for more money. Anybody who understands lease purchases, rent to owns, and things like that understands that the option deposit is non-refundable. It's not a down payment on a property. It's a deposit, which is non-refundable. Again, if you guys have more questions regarding real estate investing, business in general, ask away. Rapid fire Q&As, more of them coming. Be sure to check out my playlist on YouTube. Be sure to like, subscribe, click the notification bell. Hope this video helped you out today. I'll see you guys on the next one. Take care.